Great. Good morning.
Good morning.
Ryan Villarante and myself, Ryan Gaska, two Ryans,
I see.
um, are sitting here with you today to discuss mortgage protection, right?
Right.
Great. So, Alejandro, what were you hoping to get out of this appointment?
Well, as far as I can see, it's a protection for my mortgage.
Okay. Okay, great. Great. And let me ask you something. Why is that important to you?
Well, it's because never know what can happen in life. You know, what if I get into an accident or things of that nature?
Right. Of course. And the reason why Ryan and I help families out with this, Alejandro, is just for that very reason, right? Because we don't know when something's going to happen, but we do know that something is going to happen, though. All right.
What's that?
If someone gets sick, injured, disabled, or die, right? We don't know when it's going to happen, but we do know that something is going to happen.
Yeah,
Isn't that
unfortunately,
right?
right?
That's
We're not
right.
here forever.
Now, let me ask you, do you have family that you're concerned about?
Yeah, I have kids. I have two boys.
Okay. How are they still young and living at home, or are they older?
No, they're grown. Alejandro
Okay.
is 29. Adrian is 25.
Okay. Now, does Alejandro or Adrian either have the financial ability to take care of the mortgage if something happens to you?
They might do, but
Okay.
I'd rather secure something.
Right, of course. I
I don't
have
like to
kids.
have things on the limbo.
Ryan and I both have kids, and we wouldn't want our kids to be burdened by our financial responsibilities. Now, Alejandro, do you have a pen and paper?
I do.
Okay. Go ahead and write something down. I'm going to give you my state ID number.
Okay.
It is 0
Zero.
M as in Mary,
M as a Mary.
94
94
175.
175.
And you can
That
actually
will
go
be
to,
a state
that's my state license, California State Insurance
license.
License. And the reason I share this with you up front is because in a few moments, when I start asking you sensitive questions, you're going to want to know that you're sharing that with licensed professionals, right?
Right.
And later on, when we take an application and I start asking about your social security number and banking information, again, you're going to want to know that you're dealing with a licensed professional, right?
Right.
Okay, perfect. Now, Ryan and I's role and purpose is this: we are here to help people figure out what is going to happen when they die, right? We don't
Right.
know we don't know when that's going to happen, but we do know it is going to happen. And we're here to help you figure out what that looks like for your boys, right? Alejandro and
Right.
Adrian. Okay. Now we do that with a policy, a mortgage protection policy that's going to protect the mortgage. We're going to figure out if you need a policy. Okay. We're not here to sell people insurance. We're here to figure out if they need a policy, how much coverage they need, right? A lot of people think they need more coverage than what they do. So we're going to help you figure that out. And if you do need coverage, Adrian or Alejandro, we're going to apply for a policy today. And the reason I say that is because one, we don't know if you're going to get approved. Okay. And two, you got 30 days before you have to make a final decision. So nothing today is set in stone. Okay.
Okay.
Does that sound fair?
Sounds good because I'm looking for job very, very hard. As a matter of fact, I have a job appointment interview today, so
Well, I hope
we'll
you
see.
smash it. I hope you do great. All
I think
right.
I will. I have a lot of experience in what I do, so
Good, good. What were you doing when you were working?
I'm a chef. I'm a professional
Oh,
chef.
chef.
Uh-huh.
Okay. I love to eat, so I'm
Hey,
listening.
I think we all do. Right, Ryan?
Right, absolutely. Okay, so your mortgage, it's $380,000, correct?
Yes,
All right. It's a 30-year loan, and the
correct.
mortgage payment is $2,130 a month
Right. Yeah, and 82 cents.
and 82 cents.
Yes.
Now, Alejandro, how much do you think the home is worth today?
Uh, I believe around 480 or
480.
500,
So we have at least $100,000 in equity, correct?
around that.
Okay. Now we want to make sure we protect that. Do you currently have any life insurance or disability insurance in place today? Do you have other
No, not
policies?
today. I'm
Okay.
on the limbo right now.
So, all right. Now, do you have any savings that your boys, Alejandro and Adrian, can use to pay the mortgage when something happens to you?
Well, I have some, but not a whole lot.
Okay. You have some savings. Okay.
Yeah.
Now, is there any other debts that are going to be due when something happens to you? Car payments, home improvement loans, credit cards, anything else?
Well, I have a car loan and one credit card. That's it.
Okay. Okay. And do you have anything for retirement set up today?
No,
Okay. I'm sorry I'm asking these hard questions
go for it.
to make you feel uncomfortable, but we're trying to help you. Okay. We're going to figure out what the best fit for you is. Okay.
I see.
All right. Okay. And do you have anything in place for your burial expenses?
No, I don't.
Okay. Okay. Do you have any thoughts around that? If you know if you're going to be cremated or buried?
Probably very.
Okay. Okay. All right. Now, you said your two boys, Alejandro and Adrian, they're going to be the ones that when something happens to you are going to take over the home, correct?
Correct.
Okay. All right. Now, the three options that are what we recommend to folks, all right? It depends on what best fits the budget. I do understand you are in between jobs right now.
Yes.
You're probably receiving unemployment benefits, right?
Yeah.
Okay. They're not quite what you were making before, though, correct?
No.
Okay. So I already see this coming up here at the end when I show you the numbers. You're going to say to me, Ryan, that looks good, but let me get a job first, right?
Correct.
Correct. Okay. Well, we want to make sure that we put something in place today, no matter how small it may be, because we may not have another opportunity to put something in place, right? Your health can change.
Correct.
You may not have another chance. So I understand that these options, we're going to show you several options because we know that maybe option A may not be affordable, but I'm going to show you what it is anyways, okay?
Okay.
So option A would be a full mortgage payoff. That means you have a $380,000 mortgage. That means that when something happens, I knock on your door and I hand the family a check in the amount of $380,000. I hand your boys, okay? They turn around and pay off the whole mortgage. What's more is if you get sick, injured, or disabled, same thing. I knock on your door, I hand a check over. Okay, so this policy will pay if you get sick, injured, disabled, or if you die in any of those situations. Okay.
Okay.
Now, option A, of course, is the most expensive version, right? Because it covers the whole mortgage, but that may not be affordable to everybody. So option B is going to be enough coverage to pay down the mortgage, right?
Right.
Now, even a mortgage pay down would help your boys make sure that they aren't financially burdened and can pay the mortgage when something happens to you. They won't lose the equity you've built up in the home.
Yeah.
Same thing though as the other options. If you become sick, injured, or disabled, you're able to get your death benefit ahead of time.
Right.
Now, option C, this is the most affordable, and this might be the best fit for you for the moment because this is going to pay the mortgage payment for a period of time. Okay.
Okay.
Pay the mortgage payment for a period of time. Because here's the thing, when something happens and we know something is going to happen, your sons are not going to have to pay the whole mortgage off, right? They just need to
Right.
make the next mortgage payment. So option C is going to provide 2 years of mortgage payments. I'll show you exactly here in a second, but that's going to give them plenty of time before they have to make the decision whether they sell, whether one of them ends up moving in. It gives them options, right?
Right. Whatever it might
Okay,
be, right?
whatever it might be. Now, in all three of these options, okay, the coverage is level coverage. That means that no matter what the payoff amount of your loan may be at the time something happens. So today it's 380, but 5 years from now, maybe 300,000, right?
Right.
It doesn't matter. Whatever amount you have set in place stays the same. It stays the same. Okay, so whether you have 100,000 in coverage or 50,000 in coverage, it's still going to be the same amount of coverage year in, year out, and it stays
Okay.
level. Okay. The death benefit is tax free. I literally will be knocking on your door. I'm the guy that's going to be delivering the check when something happens. Okay. And then your family, you, if you're alive, or your sons, they will use that to pay the mortgage. Okay. Now, if you become sick, injured, or disabled, you have the right to have your death benefit ahead of time if you need to. You don't
Okay.
have to, but you have the right if you need to. And we know people get sick, injured, or disabled. Both of my parents had cancer and survived, right?
Oh,
Both of my parents had cancer and
wow.
survived. I had a younger brother that had cancer at 18. He survived.
Oh, boy.
I'm sure you know people that have gotten disabled or sick
Oh, yeah.
and they survived. Okay. So
They're still around.
this policy would pay in those situations. Now, there's no medical exam when we do the application. Ryan and I will ask you a series of health questions, and they will verify that by looking at your medical. But there's no need to see a nurse or have blood and urine drawn. Now,
Okay.
once you apply, okay, it will lock in the rates so that if something happens tomorrow or the next day, you know that the rates aren't going to go up. Okay. It
Okay.
also will provide some temporary coverage during the 30-day look. Now, like I said a moment ago, right? Nothing you decide today set in stone. You get 30 days to make a final decision. Okay. But
Right.
while you are looking, just in case something happens, right? An application today is going to provide that temporary coverage. And what they'll do is they will hold the first premium during that 30-day look, just in the case something happens. If you decide to make any policy changes, any difference gets returned back to you. There's no penalties. All right. Does that make sense?
Very much.
Okay. Now, these are the three options that I came up with. Now, I know your mortgage is 380. I came prepared to show you what I would consider some affordable options for where, for where you are today. If you decide down the road you need to increase coverage, you can do so. But at the very least, getting something in place today on the off chance something happens tomorrow.
Okay.
So option A is $150,000 in coverage, and that program is $137 a month. Now, option B is $75,000 in coverage, and that's going to go for $71 a month.
Okay.
Now, option C is $50,000 in coverage. That's going to provide an entire 2 years of mortgage payments to Alejandro and Adrian for $49 per month. Now, do any of these look like a good fit?
I will say option B.
Option B? Okay. All right, great. Now, what we're going to do here, like I said, I'm going to flip over to the.
So hold on, Rand. So in case, I get back on my feet, hopefully soon, which I'm really working hard to find a job because sitting on my butt is not my thing. So can I, because I really like the option A, right? But right now, it's not really doable for me. But eventually, I would like to move to option A.
And you can do that. You can do that. We do that all the time with folks. We will review folks' policies every 12 to 18 months and see if we need to add additional coverage. We can definitely do that. All right.
All right.
Makes sense. So Alejandro, while I get this pulled up here, would you please have ready, you may already know in your head, your driver's license number and your social security number, right?
Right.
And then you may need to get your checkbook out so we can get that routing and account number out too, please. Okay.